Welcome to the Paragon Podcast, a podcast focusing on the needs of high net worth individuals and their families. We discuss the markets, tax strategies, and how to better manage wealth with the goal of living better for today while planning for tomorrow.
Hello and welcome to the podcast. I'm Elean Mendoza, and I'm here with Evan Shorten, the firm's founder and principal.
Hello everyone, thank you for tuning in. Before we get started, I just want to quickly ask that you please subscribe to the podcast if you haven't already done so. This is the second episode of our Social Security series, and you'll want to stay up to date for upcoming episodes.
So in this episode, we want to discuss taxes and your Social Security. Specifically, is your Social Security taxable? And if so, how much would you possibly pay? As with most things that deal with your personal finances, the answers are yes, no, and it depends. So with that, Evan, do you want to dive in?
The reality is, it's possible to pay no tax on your Social Security benefits. However, how much you pay depends on what's referred to as your provisional income or combined income. The two terms are interchangeable, and for this podcast, we'll stick with provisional income. To get your provisional income, you need to add your gross income plus any non-taxable interest income and half of your Social Security income. Adding these three income sources together will provide you with the provisional income.
So let's unpack a few things real quick. Adjusted gross income is the gross income reported on your tax return minus any deductions or adjustments that you're eligible for. For example, we can include employment income, dividends, capital gains, retirement income, rental income, and so on. Then we subtract your deductions and or adjustments to get the adjusted gross income.
The thing to pay attention to when adding up your provisional income is the non-taxable interest income. This might not seem intuitive because non-taxable income from investments like municipal bonds are just that, not taxable. However, despite the income itself not being subject to taxes, it gets added into the calculation for provisional income. Also, a quick note about IRA distributions. Distributions and required minimum distributions from a traditional IRA or a 401k are added to your provisional income. IRA distributions from Roth IRAs are not. Lastly, you want to add half of your Social Security income into your provisional income calculation. If the final number you get falls between $25,000 and $34,000 and you file your taxes as an individual, up to 50% of your Social Security benefit may be taxable at your ordinary income rate. If your provisional income calculation results in $34,000 or more, up to 85% of your Social Security benefit may be taxable at your ordinary income rate. For married couples who file jointly, if your provisional income calculation falls between $32,000 and $44,000, up to 50% of your Social Security benefit may be taxable at your ordinary income rate. For married couples who file jointly, if your provisional income calculation is more than $44,000, up to 85% of your Social Security benefit may be taxable at your ordinary income rate.
So let's clarify the 50 and 85% numbers we just mentioned. When we say 50% or up to 85% of your Social Security benefit may be taxable, we're not saying that your benefit will be taxed at a rate of 50% or 85%. Again, that's not what those numbers mean. Instead, it means up to 50% of your benefit amount may be taxable. So if your benefit amount is $3,000, up to $1,500 may be taxable at your ordinary income rate, and the remaining 50% or the remaining $1,500 would not be subject to any taxes. If 85% of your benefit is taxable, it means $2,550 may be taxable at your ordinary income rate. The remaining 15% or $450 would not be taxed. If you're surprised by how low the provisional income thresholds are, it's because they've never been inflation adjusted, and the 50% threshold was created in 1983, and the 85% threshold was created in 1993.
It's also important to note that we've only mentioned federal taxes so far. When we say ordinary income tax rate, we're referring to your federal income tax rate or your tax band. Your Social Security benefit may also be subject to state income taxes, but that's really going to depend on which state you live in. For example, there are currently 10 states that tax Social Security benefits. Those states include Colorado, Connecticut, Kansas, Minnesota, Montana, New Mexico, Rhode Island, Utah, Vermont, and West Virginia. Additionally, just because these 10 states may tax your Social Security benefit, it doesn't necessarily mean your benefit is going to get taxed. Each state has their own income threshold for determining how much and what rates your benefits may be taxed. For example, Rhode Island gives couples filing jointly a threshold of $119,750 before imposing state income tax on Social Security benefits. Kansas has a threshold of $75,000, regardless of whether you file single or joint. In other words, if you live in one of the 10 states mentioned here, it's important to discuss this with your financial advisor or tax professional.
Hopefully this episode provided you a bit more clarity and understanding of how Social Security benefits may be subject to taxation. Taxes can be confusing, and therefore we encourage you to contact your financial or tax professional. If you have any questions, please don't hesitate to contact us. In the meantime, please subscribe to the podcast on either Apple Podcasts, Spotify, or YouTube. Thank you for tuning in, and we'll see you here next time.
The Paragon Podcast is brought to you by the professionals at Paragon Financial Partners, a registered SEC investment advisor. The topics discussed herein are for informational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The financial strategies and guidelines discussed herein may not be appropriate for everyone, as each individual circumstance is unique. Please review all tax information with your tax professional. Please review all legal information with your legal professional. If you have any questions or would like additional information, please visit our website at paragonfinancialpartners.com or email us at info@paragonfinancialpartners.com.